Hi, my name is David. Recently, I came across a video by Trading Rush, and this is it. He basically risks the MACD strategy 100 times and basically shows you what happened. It blew my mind. You see, he was getting a success rate of 62% with while risking 1% of his count and getting 1.5%. So yeah, that's outstanding. That's like game changing. So I thought I would give it a look and see if and yeah, let me see exactly. But before we continue, before I show you my results, if you hang around to the end, I'm going to try and replicate what Trading Rush has done over a 2 month period on the euro yen. I'm going to use the same entry criteria, the same currency on the same time frame. It's just going to be a different period of time because his video was produced by the time I started this. So yeah, hang around and see if I get the same results as Trading Rush. Because when it comes down to it, if I can't repeat it, then it's not so good. But so yeah, hang around, have a look. So these are the signals I tested, okay? I tested the MACD crossover, where the MACD crosses the zero line. My results are inconsistent with this one. My signal doesn't show an arrow for it, so I kind of missed most of them. So that's, yeah, wouldn't worry about that one. I did divergence, I did trading with the trend, and then I followed Trading Rush's rules to the letter. Now, my trading was a little bit different. I used a one-to-one risk reward, and I also used the stop was at the previous high or low, depending whether it's long or short. Now, just so you're aware of what Trading Rush has done, his rules are it must be in the direction of the trend. The MACD signal line must be below zero line for long and above the zero line for short. His stop was placed above or below the last fractal, depending on whether you go long or short, and his had a 1.5 times target to his risk. So if he's risking 1% of his account, his target was 1.5%. As we can see, this is an example of where it crosses the zero line. The signal line has crossed the zero line, the entry is there, and then risk 1-to-1, ratio 1-to-1. This one wins. I am not, for this particular signal, I was not taking into account the trend. This signal is an example of a with the trend signal. Trend is making higher highs and higher lows all the way up. The 200 moving average is in an upward direction. I took the upward thing. Stop is below the previous fractal. It just survives before taking profit. Yeah? MACD had made the advantage of this one is the MACD had made a long retrace before the entry. Admittedly, it only just survived. Now for Trading Rush's rules, as we can see, the signal line drops below the zero line, and there is the entry. Yep, and Trading Rush provides a much later entry and more profit. Easily, you could do one to both of these trades, you could increase the risk to reward. This is an example of divergence. See how MACD is making lower highs, yet price is making higher highs. Right now, this is before this trade has actually gone live, being the 20th of May. So it is unclear whether this one is a winner or a loser. So right now, this is an example of divergence. It's trading against the trend, but there is divergence. The other signal is just taking random MACD signals. This would be one. There is no reason to take this one. No confluence, so I would not be taking those ones normally, but I included them for data. If you're wondering what I've done, this is just the standard MACD indicator in TradingView, and I've just gone and included the MACD strategy is the thing that puts these arrows on here. Okay, so I hope that is clear and that makes sense what I've done. And yeah. All right, here's an example of me breaking it down on the daily time frame, looking for my wins and losses. This is another example of just a crossover against the trend. There's no reason to take it, but it won. This is actually a positive for trading rushes one. And so it goes on to win, despite quite a lot of drawdown. This one is just a random signal that I took. Another trading rush positive result, which actually hits stop. Actually does it. No, it does not, by the skin of its teeth. And so on. You can see I went and recorded all the signals the whole way down. And then, yeah, I did this on 3 time frames for 3 different currencies for an extended period of time. Here are my results for pound USD and euro yen on the 15-minute chart, 1 hour chart, and the daily chart. So the MACD crossover, as you can see, if it says zeros, it's because I did not record it. I might actually delete those. I forgot to record them. Overall, we can see that the MACD crossover provides a pretty terrible signal. For the euro yen as well, a pretty terrible signal. In fact, it actually looks like it might be better to use the MACD crossover as a reversal signal and just go the other way every single time. Sometimes you're going to be quite profitable, especially on the pound USD. For divergence was kind of breaking even. On the higher time frames, it seemed to do a lot better. Trading with the trend turned out to be very successful. A lot of these wins could easily have made 1.5%, so risking 1 to 1.5. So risk reward 1 to 1.5. So yeah, trading with MACD cross with the trend is very successful. It seemed to work better with the daily results, just from my observations. It also worked better in volatile markets when it was flat. It kind of didn't work very well. This is an example of a flat market. Even though the 200 is still pointing up, it's still kind of a bit iffy whenever these would actually win or lose. It's kind of really a bit of a debate. And Trading Rush's rules turned out to be very successful. I will, however, point out that on the daily for the pound USD, I got no signals at all over a 1-year period. On the euro yen, I did actually get a fair few signals. So yeah, but it did not do particularly well. Like no better than the trend line, direct trend line one. Same with the... However, on the shorter time frames, Trading Rush's rules actually work really well, like really well. 9 to 3, 7 to 2 on the 15-minute time frame. This stands with how he was doing his testing. He was doing it on the 30-minute chart. So outstanding results. It is definitely something to look into. If we just did trend signals, these are the totals of all the signals, including the MACD crossover and the divergence, but just the trend signals, you're actually getting really good wins versus losses. 23 to 10, 13 to 8, 5 to 2, 12 to 6, it's double, 7 to 1, that's really good, and 12 to 10 is also really good. So there is definitely something behind taking MACD signals when they are with the trend. They're very strong, actually, very good results. Have a look at this, by all means. Do your own research. Look into it yourselves. I've done 2 currencies on 3 time frames with ranging from 30 tests through to 50 tests. And yeah, like it's not in depth. Look into it yourself. Do it in depth. Please like and subscribe. It really helps me out. I put a lot of work into this video. And yeah, it's made it for me. I'm like quite surprised. Now I want to go on and see if I can replicate what Trading Rush has done. So I'm going to try and replicate his strategy on this time frame. Okay, I am going to try and replicate Trading Rush's results. I'm also going to use the Euro Yen on the 30-minute chart, and I'm going to be using the same rules. So I'm going to be using price must be in a trend. So for an uptrend, it must have the 200 moving average must be in play, and there must be higher highs and higher lows. The MACD signal, the MACD for an uptrend must drop below the zero line to take the long. Risk will be set at 1.5 to 1, and I will be trading from roughly the 8th of January 2020 until the coronavirus pandemic hits. So, or I get bored, one or the other, which develop enough data. So let's see how we go. Yeah, I am kind of hopeful this could be a killer strategy. Let's find out. Back trading it live. I will be playing it on fast forward, and I will give you the results at the end. Here are the results of 2 months of backtesting the Euro Yen on the 30-minute time frame. We have 19 wins and 14 losses, a total of 33 trades. At a risk-reward ratio, of 1 to 1.5, we can see that 19 wins gave us 28.5% profit. 14 losses gave us a loss of 14%, meaning out of all the trades, we end up in 14.5% profit, which is very, very good. That's outstanding, 14.5% profit. To be honest, guys, the rules are really simple. You could set up an EA to do this blindly, not looking. I would love to find out whether an EA could in fact do that. Yeah, I've just got to go find a guy who can make an EA. If you stayed this far, that's awesome. Thank you very much. Please like and subscribe. I put a lot of work into this video. I've had some real aha moments. It's definitely going to change my trading style. I'm going to be looking into this a lot more before I implement it. But yeah, I'm psyched by it. I'm going to be doing it. So yeah, I hope you've had some aha moments, and please like and subscribe. Thank you very much, and good luck.